While Tesla stock has fallen 30% year to date, the company's continued to make strides in all fronts, and I mean all fronts. Today, we're going to review the progress they're making in full self-driving, with Elon commenting on the rate of progress now that they're no longer compute constrained. The progress they're making in auto, with the CEO of another automaker saying only Tesla has the margins, and that is a major advantage over competitors. And the progress they're making on Optimus, with the new job posting suggesting the Tesla bot is ready to be tested in the factories. So I've got Larry Goldberg with us, and he's a multi-entrepreneur. Thank you so much, Larry.
Thank you. Great to be here, Herbert.
So 3 stories, because Tesla has many segments to their business. And it's funny, with the stock, you might think that they're failing. And so everybody's focused on the margins and how many cars they can deliver this year. Well, you have to just, as some of the data we're going to show today, you need to kind of look away from the trees and look at the forest for the trees. But, they are progressing in auto. They're progressing in FSD, and they're progressing in bots. Let's dive deeper and show more about that data, what we're talking about. So everybody by now hopefully has seen this. Elon said this a few days ago. He said that there's going to be 3 significant improvements to full self-driving, and it's going to roll out roughly every 2 weeks. Should be really shining bright by late April or May. So typically everybody would laugh, saying, hey, every time you say FSD is going to be robotaxi, it's not going to happen. It's been many years. He says that every year. But now people are no longer laughing. They actually believe that there are going to be improvements every 2 weeks, like real 2 weeks. Brett Winton from ARK Invest, he wrote this post. He said, fits with the thesis that the rate of progress becomes more predictable now that FSD sits on its full stack neural nets, right? So now that it's the neural nets that are actually coding and showing you what it can solve, it's much more likely that you can actually predict now how fast FSD will solve problems. He suspects that this improvement rate expectation is derived, right, from the max training compute. Now that you have maximum training compute available, you cross that with the typical amount of data required to fine tune out an error, right? So if you know you got an error, but you've got the data, you got the max compute, you can now basically know if it took this long for that neural net to solve that problem, now you can basically figure this out. Elon said to him, yes, yeah, that's right. So then Brett said, I assume there's an improvement queue. So there's a queue that they've created. Here's a bunch of improvements or errors that they want to solve one by one. Probably stack ranked by occurrence rate, cross with severity. Seems like the trend should give you a sense of future intervention rates. So basically, the Tesla should by now actually know, here's how many things that needs to be improved. Here's how fast it will solve them. And you should be able to predict what's going to happen with future intervention rates or time period at which you become data starved. But net would seem like you should be able to project a particular target intervention rate sufficient to bracket a commercialization date. So you should be able to guess when this is happening. Yeah, what do you think about his assumptions there?
He's making a lot of assumptions, and I probably don't know enough to challenge any of those assumptions. One of the problems is, I've got 50 years of coding experience behind me, and most of it is all of it, is heuristic code. It's only in the last 2 or 3 years that I started working on true AI as we started to reverse legacy code into modern code using AI. And so, I don't have a measure of how they're able to create good driving examples out of bad experiences. And so I'm assuming that they're able to actually generate a good solution and then use that generated good solution to train the model. And I assume the model, the tool is able to build a better solution or to generate a better solution itself. So if that sounds complicated, it's because I'm not clear on how they do all of that, but it's very critical, that they're able to do that. That is to say, to generate solutions rather than to have results from the existing cars out there, the fleet. And I think it's a combination. It'll have to be a combination. But they sound very confident. They sound like they know what they're doing. And we've seen generative AI, the ability of generative AI to generate some of this stuff is quite extraordinary. So it's looking very promising, I will say. The rate at which they are updating, it's not going to be 2 weeks. Of that, I'm convinced. I think it's going to be closer to a month or so between these rapid iterations. But it's getting good, really good. I've just been driving, the latest version. It's extraordinary, extraordinary.
Okay, well, so a couple of points I want to make. So first of all, he did say that there's 3 improvements that's coming. So they already know what this is. It's already on the roadmap, right? That we're talking about the ability FSD to actually reverse, the ability to do smart summon, and he called it banish, which is letting the car leave the car and let the car find its own parking spot. So right, whether it's 2 weeks or a month, but they know what they're going to release in terms of features. They just released this weekend. They're going to release 12.3.1, which is the minor bugs. But at the point that Brett was making makes a lot of sense to me, right? So that, you're now no longer compute constrained, or about to get no longer compute constrained. Elon has said that by the end of this year, for sure, we're not going to be compute constrained. Then you've got tremendous amount of data. They already have that. So as they solve, and you saw 12.3 solve many, many, many edge cases already. So what they'll do is if there's another issue, then they take that. They know how much data I need to feed it. I already got the maximum compute. I can figure out basically what my guesstimate is when that will be resolved or learned. Then you just do one after another. Where I don't think he's right is I don't think you know how many edge cases there are. But what he said was you would find the ones which is the high severity, which is the most occurrence, and you'd knock those down. So maybe there are, like, that could be enough, like, but to get us, but it was not yet quite, it'll take a long time to get to robo-taxi level, but boy, it's going to start to feel really good very quickly. Like you're going to feel like, regular driving, just going around a block. That's like,
Yeah, what we're seeing from Claude and GPT-4.x and what we're promised with GPT-5 is that the rate of improvement, is exponential. I've seen the curve, of all of these generative models, and the curve is obviously it's climbing pretty steeply now. So one imagines that Tesla's experiencing the same thing with what it's able to generate. And so, it's interesting because, Chuck has been seeing these drivers trying his unprotected left again and again and again. And he thinks they're testing the software. I think it's the other way around. I think they're training the software.
Yeah.
I don't think they're trying to test it. I think they're actually letting it build a library on that particular use case. And I have no doubt that there are other teams doing other tests on these edge cases, because I think that's part of the combination of the internal generation of cases, but also spicing it with actual cases.
Exactly. I agree with you. Okay, so let's move on to the next topic, which is auto. Right now, people think that, oh my gosh, the story is bad, right? EVs growth has slowed down. This Tesla's growth is going to be severely damaged, and that's why the stock fell. Now, let's take a look what Sam Corris from ARK says. He said this, right? Here's a thread to send to people when they quote the media saying that there's an electric vehicle slowdown. Why is the media claiming an EV slowdown? It's a case of missing the forest for the trees. This is what EVs look like. Well, this is what the media looks like. The media is looking at the EV sales growth, and that is truly decelerating. So EV sales growth is 113% 2021, 59% 2022, 28% 2023. But he says that's the trees. It's the wrong thing to look at. What should you look at? So before we get to what you look at, let's take a look again at this graph. So in the black is the battery electric vehicles. In 2021, it grew 113%, 59% in 2022, 28% in 2023. So people are thinking that that is the case. Now, of course, you can look at the battery ICE vehicles, and it looks like that it's negative, flat, pretty well flat or negative. There's reasons why, right? COVID happened. These things kind of screwed everything up. But what he's saying is you should look at market share of gas vehicle sales. And you can look here of all cars. And that's what you should look at, not the electric vehicle growth rate. That's the wrong thing to look at. So if you look at market share, you can see that internal combustion engine, which is the black, it peaked in 2017 here. And now you can see that it's falling quite, you can almost predict how fast the ICE vehicle sales are going down. Then you got the hybrids, you got the plug-in hybrids, and then you got the electric vehicles, which again, you can see is growing. So that's what you should look at, market share. Here's the graph. Now, the decline in adoption is going to increase, year-over-year growth decline. The growth rate is going to decline. Okay, this is why it looks like this way. So this is a adoption curve. As the adoption curve goes exponential, which is what we're saying it is, the year-over-year growth rate is going to go down. That's just the way it works. Because when you got the small numbers, then it looks like it's a lot higher percentage of growth rate. But then once you get to bigger numbers, it's less, right? So that's why he's saying that you got to understand, you're not looking, who cares if the rate of adoption, your rate per year is going down. And what matters is the adoption. So, and then he says, what even more confusing is that it's not a monolith. Each time an EV launches, a new adoption curve begins, and then there's overlapping. End of the day, what you need to look at is this, right? The market share of EVs to all cars is growing. And what does it look like? An exponential curve. So now we're at 12% of all cars sold and globally is electric vehicles. So yeah.
He's absolutely right. I mean, you have to look at multiple growth curves for multiple price point cars or multiple vehicle types. And we're at a pause largely because of Tesla. Tesla has got such an impact on the market outside of China, in China as well, but not anywhere near as in China as in outside of China. Outside of China, it's a Tesla story. Tesla owns that unit. It just owns the market. And the thing about it is that Tesla right now has only got 2 vehicle models on a global basis, the 3 and the Y, and they're both in the pretty high price bracket range, even at their current price level. So they've reached somewhat of a plateau. They're still growing, actually. The last year was pretty good growth, but there's a plateau that they're reaching because they've saturated the TAM, the available market of that size car. Until the 2 comes out, they're not going to expand as rapidly as they have been expanding, and that's going to affect everybody. Now, China is a different story. The Chinese manufacturers have come out with a plethora of models at every price point, and they're growing across the board, except China is in a world of hurt right now. We've got this situation where some of the exponential curves, and Sam is absolutely right, it's multiple different exponential curves. Some of those exponential curves are not available to manufacturers. And yes, I know there are a lot of other manufacturers producing a lot of cars, but you'll see those cars are very, very non-competitive. There are only a handful of competitive EVs on the market that you can really assess from a market share perspective. The others are just, they're cars that people are making to try and say we're in the EV business. They're not.
Mm-hmm. And so, like you said, Tesla is growing faster than everyone else, but we're in between growth curves. Just wait, and then we're going to grow like crazy again. Electric vehicles is growing exponentially. There's no ifs, ands, or buts about that. Now, of course, there's global issues. There's, incentives. There's these things. But at the end of the day, I'm not going to put the bet against electric vehicle versus ICE. It may be delayed a few as they, convince the public that hybrids are better or something like that, but eventually EVs will there's no stopping at this point. Yeah. You going to say something?
No, I'm
Okay.
absolutely aligned with you.
All right. So now let's, but keep on this auto business. And Tesla has the margins. Everybody knows it. But, the competitors, they're suffering. They are suffering hard. And it's refreshing now that you actually have here a automaker CEO verbalizing this. This is Xiaomi. The CEO, Lei Jun, said that Tesla has a unique advantage of being able to raise the prices of its electric vehicles, a move that other companies cannot pull off because they're risking huge losses. So what he means there is the opposite, right? Which is Tesla, because of margins, can cut prices, and they have. And now all these car manufacturers out there are just competing like crazy. But if you try to raise your price in China, then you're not going to sell your car because there's so many competition there. Tesla can do this if they wanted to. So this is the Xiaomi CEO admits that Tesla has a unique advantage over the EV competitors.
Well, the key to Tesla is its manufacturing costs are so well contained. And the Chinese manufacturers haven't been as diligent in that regard as perhaps they should have been. They've been very, very focused on getting to market and very, very focused on getting to market as fast as possible. And so they've sacrificed somewhat margins. So margins are not only thin, in some cases, they don't exist. So that's a pretty critical issue. Tesla has been incredibly cautious about protecting its margins. A lot of people criticize it for having dropped its prices over the last 2 years, 2.5 years. I think they've had to expand the TAM of the models that they have. And given the very significant margins, they could certainly afford to do that. But, they're late on the Model 2 vehicle or the next generation vehicle. I think once that arises, then it's going to straddle the price range from quite deep into the Model 3 and Y territory down to, below the $25,000 level, the different models on that platform. And then the 3 and the Y can certainly assume with some refreshing their price differential.
Yeah, well, people do say that Model 2, the new compact car by Tesla is delayed. But the reason it's delayed is because they're completely reinventing the way you produce cars so that the margins that can actually sell the car at lower price and yet maintain quality and higher margins. That you've been saying this as well, that when you look at, you just told me earlier that if you look at cars, you can't just look at price and market share. You've got to look at quality as well. And this CEO says this. This is what he says. He said here, while other companies are able to offer cheap and affordable EVs, new companies like him are placed in a strange spot as they risk being undercut and outsold by established names on the block. Tesla, on the other hand, has a strong reputation for building quality electric vehicles that are supported by strong charging infrastructure. So they're known for quality, they're known for lower price or quality or affordable or the right price, right? The effective price. And so they can hike their Model Y pricing and they'll be fine. If any other company tried to do that, they're going to be knocked out. It's so competitive right now that only Tesla dares to raise prices. He's talking about in China specifically. And then the other thing, this new, more recent data from Boston Consulting Group showed the report that automakers lose about $6,000 in every EV they sell.
It's so pitiful, that is so pitiful that they're losing $6,000 on cars that are just not competitive yet. It's really hard to credit. And, they would have done so much better if they just come to Tesla and said, let us license these pieces from you. Let us, we'll pay you an extra couple of dollars. Give us the license. Tesla would have quite happily done that. They would have been way ahead of where they are today. Way ahead.
Yeah, let's take a look at this graph. So we're looking at EPA. This is the estimated range, how far the car can drive based on its battery. And this is the price point. And then you can see Tesla, the Model Y longer range is in the red there. Big market share, fits right in the middle of just 300 something miles range, $50,000. Then you got the Model 3 longer range here that gets you to be further. Then you got the Model S here, the little tiny red. So the next wave adopters are going to try to go here, the 350 range, and still be in the 50,000. That's the goal here. What's your thoughts on this graph?
Yeah, I don't entirely agree with the graph because they've put the optimum range at the 350 mark. I don't think that's true. I think 300 is fine in today's world, or 330 is fine in today's world, if you've got a good charging infrastructure, as Tesla have. What's interesting about this chart, firstly, kudos to Ionic, the Hyundai brand. They have this enormous range, but just look at their sales. That the size of the dot is the number, is their sales,
Hmm.
and the sales are very tiny. Making my point for me that people really are looking for, and maybe it's because it was just really newly introduced, but it seems to me the sweet spot's about 330 miles, 350 miles, where the Model 3 and Model Y really roam. And you're looking at so many cars that are clustered around that mark who's selling very, very small number of cars. So what we're not seeing here is the price differential. I mean, they're showing, like the Mustang Mach-E at the same level as the Tesla Model Y range, but given the size of that bubble, it's absolutely unclear where the
Hmm.
price is really sitting of the two. So, they're trying to fit a lot in this graph, but what we see from the graph more than anything else is just how pitiful these other manufacturers are in terms of their product. Very expensive, low range. It boggles the mind, really, how they expect to be competitive.
Okay, so that's auto, right? We took a look at the auto. Looks like the EV is still going up. We're looking at the competitor executive CEO says that Tesla is in a good position. They're viewed very high quality. You got to look at quality, not just price and range, and all the features. Tesla has hit it right in the middle perfectly, and that's why they're getting good sales. So they're going to do well. The other story, of course, is bots. So we've been seeing every single day a brand new demo being dropped by all these bot companies. NVIDIA came out and said that they've got partnerships with at least 9 humanoids
Right.
and many other different kinds of human scale bots as well. And it's heating up. But Tesla's still the leader. They've got the next gen. Their humanoid Optimus is really looking like the actual the actual hardware of that. It's like it's there. They've also been able to show autonomy. So now, what's next? Well, here's a job posting that Tesla had just released recently. And in the job posting for a technical program manager for the Tesla bot, it actually says to drive the deployment of robots for trial applications, execute pilot applications of humanoid robots in the various vehicle manufacturing environments, cover multiple job sites, and may require frequent travel. So this is like a job for a technical program manager. Just needs to help get Optimus in field trials in the factories. So this is the job posting itself. So it's again, one of the things that Tesla's has that the other bot manufacturers have not shown yet is they're hiring for manufacturing jobs. Like in this case here, it's an actual pilot for others. Others have done that too. So Figure announced that they have a partnership with BMW. Aptronic announced that they have a partnership with Mercedes. But yeah, here they're actually hiring people now.
Well, of course, they have a partnership with a leading EV manufacturer. Look, there's no doubt that they're gearing up for the program. The fact that they're hiring them, I just want to bring everybody's attention to reality. The fact that they're hiring a program manager now for implementing the bots in the factory doesn't mean that they're ready to implement the bots in the factory today. Program manager has to set up the program, design it, has to actually hire people. We're probably 3 to 6 months away from having those bots actually running in the factory. And I've seen these other robotics companies talking about their trials, and they're also looking at October, November, December for their trials. So don't think it's going to happen tomorrow. It's not going to happen tomorrow, but it's going to happen really, really, really soon. I do want to talk about, though, this whole NVIDIA display of these 9 robotic companies, or these 9 partners. is it worth having a discussion about that very quickly? Because I've got a view on that.
Hmm.
So my view is very simple. When Tesla decided to bring FSD in-house, the whole autopilot program in-house, and they turned down their previous partner, they looked at NVIDIA very closely. And what Elon said about NVIDIA is they have a very good processor and it comes with all the tools. And why did they not choose it? Because of its cost. Because what NVIDIA wanted for that product and all its tools and all the ancillaries that come around it, he said would have made the cost prohibitive. And so he decided instead to develop their own processor, which they did, and it's been incredibly successful. The one thing that isn't the limiting factor for them is their processor. What I'm trying to say is these other bot companies have to pay the tax, the NVIDIA tax, and they have to use the, CUDA development environment, which honestly has an enormous, layer of work around it. All I'm trying to say is I think Tesla, having designed their own AI inference chip, is probably well ahead of the pack, both in cost, but also in experience and operational capability. So I think that that is a huge advantage to Tesla and not an advantage to all these licensees of this third-party chip, even though the chip is, NVIDIA, and NVIDIA has this great reputation.
So all of these bot companies, they partner with NVIDIA because they need it. They don't have the data warehouse, they don't have the training environment, they don't have the chips. And then they will need to partner with an AI company. Some of them will try to do it themselves, but again, you're bot manufacturer, you're a bot startup. So they're partnering with OpenAI. You've got Tesla has their own chips, has their own partnership with AI, with XAI and Grok, and of course their own AI team, which is already proven with the 5.5 million robots, you know, in the streets with wheels. And the reason why I think that these bot companies had to partner with NVIDIA is because of this idea that you need to scale, you need to manufacture and get these bots in the real world, and that experience feeds back. And so each individual bot company is not going to be able to manufacture that many that fast, but together, maybe all of them might get some number that maybe it's going to be less, but still closer to what Tesla's able to do each year. And you need the bots experience in the real world, that flywheel of the data and experience and feedback to be able to teach it, to actually be able to do real skills. um, and so it really is in my mind like there's Tesla and then the other bots, and then together they're equal. But it's not like one of these guys, I mean, we'll see what happens. But
Yeah, I am interested in how they're going to resolve um, multiple bot companies partnering with NVIDIA. Look, they'll use CUDA, but clearly for training and for the generative model, each will turn to a particular vendor. They're not all going to use OpenAI. They would be foolish to all use OpenAI, and certainly they want a walled garden and not to share with the other bot companies, because each of them will have their own philosophy and their own mechatronics, and it doesn't make sense for them to share. But as far as in terms of processing power, NVIDIA is offering that processing power to them, but it's also saying feel free to use, all the other all the other shared services. It's going to be a scramble. Each company is going to cut out their own path, but they're all going to have to pay the NVIDIA tax. And perhaps it's worth it because the performance may be very, very significant. But from our experience in the vehicles, it's going to be very draining on the battery, and there's going to be a lot of overhead that comes with the NVIDIA environment. This we know from of old. I think this may be, the very significant advantage that Tesla has.
Very interesting. All right. So we just talked about today, the advancements and, the progress that Tesla's making in FSD, they're making in auto. Just EVs is still very much a growth story, despite what people are saying. And then we're seeing here the bots. Progress is still happening.
The fastest growth of all, we've ignored.
Watch energy. It's Larry. It's all about energy. You're right.
I think that this quarter that's coming up, we'll see, 100% growth on this quarter of last year. And we'll see not a high growth, only about 35% growth on last quarter. But by the end of this year, we will have doubled the revenue on last year at a much higher gross margin. You heard it here first.
I heard it here. By the end of this year, it'll be double from what it was last year, even higher gross margin.
Significantly higher gross margin, significantly higher.
Isn't that crazy? And then as you have projected, and many have, energy is going to be larger than the auto business. And so here we are worried about the 2.1.
Elon said it 5 years ago.
Yeah. But I mean, it's like everybody's now saying it too. Like they're calculating that out too now at this point. And it's funny that here we are talking about, the 2.1 million versus 1.9 million this year, and the slowdown in EVs and margin compression for Tesla.
The rate of energy growth is not going to supplant the growth that we're looking for from autos.
Yeah.
But if Shanghai gets into operation by the end of this year, we can see
factory.
another 100%, I don't know about 100%, probably 80%, 70 to 80% growth next year as well. Yeah. Well, you're talking about an incredible freight train here. I mean, an incredible freight train. And we will see an energy plant being announced
every year, at least one a year.
Yes.
Yeah, at least one a year. There's no doubt about it. And in fact, I suspect that we're going to hear an announcement in the next 3 months. It's pretty sure. Thank you so much, Larry. You're right. Energy is another big one. I appreciate you. Follow him on X at Tesla Larry. Thank you, everybody. Appreciate you guys. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.